What's up, everybody? Redfin has just came out with their 2024 housing market predictions, and they seem to be giving a lot of hope to buyers for next year. But will this really change anything when it comes to the affordability crisis? Is this the housing crash that people have been speculating about for the last 3 years? Today, we're going to go through them one by one in the article by Redfin titled, Redfin Predicts 2024 will be the year homebuyers catch a break, with home prices falling and new listings rising. They forecast everything from home prices to Biden's housing problem. And don't be surprised if I seem a little sassy or even possibly annoyed by some of Redfin's predictions. We'll see what you think. So let's dive right in. Prediction number 1, home prices will fall 1%. The first prediction is that home prices will fall 1% year over year in the second and third quarters of next year, when the home selling season is in full swing. This slight decline will mark the first time prices have declined since 2012, when the housing market was recovering from the Great Recession, with the exception of a brief period in the first half of 2023. According to Redfin's chief economist, Daryl Fairweather. Fairweather is calling this a favorable shift for buyers. Home prices will end this year up 3% year over year, and the typical buyer's monthly mortgage payment is only $150 below the all-time high. So will this 1% decrease in home prices really make a dent in the affordability crisis? And it's important to note that Redfin is predicting this 1% decrease only in the median sales price of existing homes. And aside from falling 1% in the second and third quarters, Redfin is predicting home prices will remain flat in the first and last quarters of next year. In last year's 2023 housing market predictions, Redfin's then Deputy Chief Economist, Taylor Marr, predicted that high mortgage rates were likely to make 2023 the slowest housing market since 2011. He also predicted that mortgage rates would end the year around 5.8% and home prices would drop by roughly 4%, neither of which has happened as of mid-December. Prediction number 2, new listings will tick up. Fairweather states that the reason home prices will drop is that new listings will increase. We've recently seen a double-digit annual increase in homeowners contacting Redfin for help selling their home, alongside a small drop in requests from prospective buyers, the company noted. Her reasoning for new listings to increase honestly seems a bit flaky to me. She writes that homeowners are starting to accept that we won't see rates in the 3s or 4s anytime soon, and they want to sell before prices fall. As we know, most homeowners who have a mortgage have an interest rate way below the current rate, what we've been calling the lock-in effect. I can tell you from my personal experience, I have several sellers that are planning to stay put rather than sell now and then go buy with a much higher rate. It just simply doesn't make sense to them, and honestly, I understand. In fact, most of my sellers that are choosing to sell now are planning on renting after. She does say that one reason that listings are going to increase is that some owners, specifically in South Florida, are seeing an opportunity to cash out on their equity and move to a much more affordable place. She does not specify where exactly that is. Prediction number 3, home sales will increase and end the year up 5%. It makes sense. If they're predicting more listings, it would result in more sales. Fairweather writes, in the first quarter, existing home sales will be on pace for 4.1 million total in 2024, up from an annual pace of 3.85 million in the fourth quarter of 2023. Sales will continue rising throughout the year and be on pace for a total of 4.5 million by the fourth quarter. Home sales will speed up throughout 2024 as affordability improves and more homes hit the market. Overall, Redfin expects 4.3 million existing home sales in 2024, which would be up 5% year over year, according to the forecast. A crucial difference between 2024 and 2023 is that sales will be gaining momentum throughout the year rather than losing momentum. We're starting to see signs of a shift towards a buyer's market as pandemic-driven inflation takes its last gasp, she wrote. Prediction number 4. Mortgage rates will steadily decline, but remain above 6%. Redfin predicts the average 30-year mortgage rate will linger around 7% in the first quarter, then declined throughout the year, falling to around 6.6% by the end of 2024. Mortgage rates are likely to remain well above pandemic-era record lows because financial markets increasingly believe the country will avoid a recession in 2024, Fairweather said, adding that the Fed Reserve will likely keep interest rates at the current level at the beginning of the year, even though inflation is largely under control. She then predicts the Fed will cut rates 2 or 3 times starting in the summer, which is why mortgage rates will decline as the year goes on. Then she adds, the gradual decline in rates, combined with these small dip in prices, will bring homebuyers some much-needed relief. Really, Daryl? Much-needed relief? So far, it doesn't really sound like she thinks 2024 is going to be that different from this year. Better? Maybe, but only slightly, at least so far. According to Freddie Mac, the average 30-year fixed-rate mortgage today is 7.22%, which is obviously higher than 6.6% by the end of 2024, but not enough, in my opinion, to really make a significant difference in the unaffordable housing market for most buyers. Prediction number 5. Change will come to the real estate industry. This has to do with the commissions that buyers and sellers will pay real estate agents next year, after a jury found the National Association of Realtors and others conspired to gouge buyers and sellers. Instead of the home seller bearing the 5 to 6% fee paid to their broker, which has historically been shared between the listing broker and the buyer's broker, the arrangement may change. Home buyers in 2024 will become even more aware of how much an agent costs, Redfin said, and less apologetic about negotiating commissions. They also cite that many home buyers will work directly with the listing agent rather than having their own representation. I did a video on this recently where I said I also think many home buyers will go without having their own representation. Not because they think they'll get a better deal from the seller, but because they simply can't afford to pay the buyer's agent in addition to how expensive it already is to buy a house. This will adversely affect first-time buyers the most, as they should be able to have their own representation to guide them through the home buying process and protect their interests by negotiating for them and not the seller. Fairweather also writes that the possibility of legal action will accelerate this trend in 2024, as the U.S. Department of Justice considers whether a listing agent should be involved in the fee paid to a buyer's agent. A Department of Justice suit could take years to be litigated and may never be filed. She ends by saying that Redfin has often fought for these changes and they'll be good for consumers. One thing Fairweather left out in her essay is that Redfin is one of the defendants in another class action suit by home sellers and is accused of engaging in a price-fixing conspiracy to inflate commissions. Prediction number 6. Renting will lose its stigma. Redfin believes demand for large apartments and houses will climb as more young families embrace the renter lifestyle. They write that they are already seeing signs that young people are redefining the American dream, citing that nearly 1 in 5 millennials that responded to a 2023 housing survey believe they will never own a home. Nearly half of those survey respondents said that homes for sale are simply too expensive, and a similar share said they can't afford to save for a down payment. A recent Bank of America analysis found rent to be cheaper than mortgages in all but 2 of 97 major metropolitan areas. Others just prefer renting. 12% said they just aren't interested in homeownership, and 7% said they don't want to put the effort into maintaining their own home. As for rental prices, Redfin expects prices of large units to climb next year as supply fails to meet demand. However, there will be downward pressure on prices for smaller rentals because there are more of them and a backlog waiting to hit the market. Prediction number 7. Biden has a housing problem, which could hurt his re-election bid. So here's what she has to say about this. Home prices are up more than 20% since President Biden took office. That's a problem for his re-election bid. A recent poll found that 65% of voters disapprove of Biden's handling of the economy, with lack of housing affordability likely a major factor. Even though the overall economy is strong, high housing costs are making many Americans feel poor. That's especially true for young people who don't yet own a home. And even though affordability will become less of a problem in 2024, many Gen Z and millennial voters will be playing financial catch-up for a while. She continues with, we expect President Biden and his opponents to make splashy housing policy proposals to try to lure voters who are unhappy with their economic prospects. Democrats are likely to focus on subsidizing down payments for first-time homebuyers, promoting inclusionary zoning and funding housing vouchers, which are all popular with liberal voters. Republicans are more likely to focus on reducing regulations that limit development. So I guess we're just gonna have to see how this plays out. Redfin continues their 2024 forecast with these 4 bold predictions. Number 1, big price declines in coastal Florida. We expect home prices to fall fairly significantly in parts of coastal Florida, including Northport and Cape Coral. That's partly because prices surged there during the pandemic, leaving a lot of room to fall, and partly because increasing risk of climate disasters is making those areas less desirable and home insurance more expensive. Bold prediction number 2, people will decide where to live based on in-office policies, climate risk, and affordability concerns. There will be a wave of boomerang migration, where remote workers who fled expensive job centers for more affordable places return to where they came from. For example, tech employees will move back to Seattle from Boise, Idaho, as companies enforce in-office policies. Also, many priced-out Americans will move back in with their boomer parents, oftentimes with children of their own, creating more 3-generational households. Bold prediction number 3, local governments will focus on housing affordability. More local governments will adopt a land value tax to make homes more affordable and promote building. Like presidential candidates, congressional candidates will also focus on housing affordability, and the U.S. government will encourage cities and states to build more housing. For instance, they may take a more active role in financing new construction. And bold prediction number 4 is that more homeowners will start using their home as an ATM, pulling out cash to cover credit card debts and home renovations. And finally, Redfin gives 2 possible scenarios that could happen due to the economic unpredictability involving the financial markets volatility, the course of the wars in Europe and the Middle East, and the US presidential election. The first is the upside scenario. Weekly average 30-year fixed mortgage rates drop into the 5% range. That could happen if the US economy falls into a recession. While higher unemployment would drag down demand, the effect of lower mortgage rates would outweigh that effect, pushing prices up around 3% and sales to about 5 million. And the downside scenario is mortgage rates surpass 8%, which hasn't happened since the early 2000s, and stay high. This could happen if the Fed holds interest rates steady all year. Home prices could fall 5% or more, and sales could drop into the $3.5 million range. So there you have it, Redfin's 2024 housing market forecast. I don't know about you guys, but it really doesn't seem that different from this year, 2023. But what are your thoughts? Definitely comment below. And if you missed last week's video on Realtor.com's housing market forecast for 2024, definitely check that out next. Thanks for watching. I do appreciate it. Bye!